So we are doing like paper 41 of October, November 2023, 9706. There are two questions in it. Question number one is which one? Question number one is
The
for
budgeting.
budgetary costing, and question number two is standard costing. Correct?
Right.
Okay, come on. First question would always be a theory question of 2 marks. Can you tell me the purpose of preparing a cash budget without seeing? Do you remember?
Yeah, miss.
Tell me.
Yeah, miss. Cash budget would help the business see if if they have lesser cash, it help them, get a bank loan, and it would also help them see if they have a cash surplus so that they can invest in things.
Okay. So it helps to identify cash deficit. You need to know this, that purpose of cash budget is it helps to identify cash budget deficit so that you can arrange funding, identify cash surplus so that you know where you can invest your surplus money. Correct? Now, do you
Yeah,
know
miss.
the format of preparing the cash budget?
Not that I exactly remember.
Not that you exactly remember. Okay. All the receipts minus all the payments. You will get to know your surplus or deficit of cash. In that, you will add your opening balance of cash. You should get the closing balance of cash. Okay.
Yeah, miss.
The format of cash budget would be all the receipts minus all the payments that you've made. This will help you give what? Surplus or deficit of cash. In that, what you're going to add? Can you please say?
The opening cash.
In this, you will add your opening cash balance and you will get what?
Closing.
You will get your closing cash balance. Okay, fine. Now look over here, read the question, please.
The
Read the
limited
question.
sells one product to prepare the cash for the 3-month period ending on 31st January. The
So
management
you want,
accountant provided the
1 minute,
information.
hang on. You want cash budgets for 3 months period, which is ending on 31st January. Whenever you read, you need to mark and understand what are they asking you. So you want it for 3 months. So which 3 months you want the cash budget for?
November, December, June.
November, December, and Jan. So when I know this, I will prepare this line for me. Okay. So I want the cash budget for November, December, and Jan. Are you with me?
Yes,
Okay. They have a markup of how much?
50%.
Markup is on?
Sale.
No. Markup is on?
All right, the cost.
Markup is on cost. Margin is on?
Sales.
So markup is on cost and margin is on sales. Okay, fine. Now you have your actual sales. Actual sales for September, October, November, December, and January. Can this actual sales become your receipts?
No,
No. Why?
miss is reading with budgeting.
Because you're doing budgeting.
Miss, like we consider the budgeted sales.
Okay, now see, this is your actual sales, this is your budgeted sales. Okay, but we want which sales?
The
Cash
budgeted one.
sales.
Yeah,
You will take this budgeted sales into consideration while you're preparing cash budget, that is for sure. But the sales can be two types of sales, right? You can have cash sales, you can have credit sales. And we are looking at what sales?
transfers.
Cash sales. What sales are we looking at? Cash sales, because we are preparing cash budget. So we want to know how much is the cash sales. So tell me, how did you calculate? Calculate the cash sales. Read ahead.
10% of sales on cash basis, so we just multiply into 10%.
Okay, fine. So 10% sales are on cash basis. So what will you do? Tell me.
You take all of the values from November, December, and January and calculate 10% of it.
Calculate 10% of it. So you can directly do it. It will be how much?
39, 45, and 37.
39, 45,
45 and 37.
37, 500. What about this?
Um, yeah, the director of goods sales.
The remaining customers pay 2 months after sales. What does this mean?
Miss, like the 90% they pay after 2 months.
Okay.
Right.
90% will pay after 2 months. That means what?
So the sales of November, the 90% of it you'll get it in January.
98% you will get it in January. Why 98% you will get it in Jan?
Miss, because 2% are irregular.
Okay, fine. 1 minute. So come on, tell me. Sales of November you will get it in January.
Yeah,
Sales of September you will get when?
November,
Sales of September you will get it in November. Sales of October you will get it in.
December.
Okay, fine. So how will you find out? And 2% of the trade receivables will be irrecoverable.
Miss, so it'll be like, let's say 360 into 90 into 98.
So why 98%?
Miss, because 2% is irregular.
Okay. So 90% of this I will get it when? Of
After two
September I
months.
will get it in November, right?
Mhm.
Sales of September. So I should get it in November, 90%. And whatever
Yeah.
amount I get, 2% will be bad debt. So after removing the irrecoverable debts, the remaining 98% I will get it when? In November. So this comes up to how much?
Will be 267, 920.
You do the calculation again.
Just let me get 317, 520.
Sorry,
317, 520.
317,520. Can you give me the next month? This 317,520 will go for November, right? September sales.
Yes. Yeah. Let me just calculate.
First, give me the calculation. Na? What will I write?
Yeah. It's 420,000 into 90% into 98%.
Into 90% into 98%. This will go for which month?
December.
And for January?
Miss, it's already given for January. Like you have the sales of November, 390,000
Into?
into 90% into 98%.
Into 98%. So this will be for January. Okay. Can you give me the amount?
370, 440.
Okay. And
And
Jan?
343, 980.
So this will be 370,440 and 343,980. Are you with me?
Yeah.
What is this? This is received after 2 months.
Yes.
after irrecoverable deaths. Correct?
Yes.
Come on, read the third adjustment.
All purchases are on credit. The limited is allowed to pay 2 months after purchase.
So he's allowed to pay 2 months after purchase. Okay.
Yeah.
So that means for September purchases, he's going to pay when?
November.
November. For December purchase, he's going to pay when?
Uh,
October purchase is going to pay when?
December.
December. And for November purchase is going to pay in January.
Jan.
Okay, fine. P Limited pays 1 month after purchase to get a cash discount, but he is going to pay 1 month after the purchase so that he gets a cash discount of how much?
1.5%.
1.15%. Okay. So I need to know how much he is going to pay to the suppliers. Am I correct?
Right.
Do you have any idea how much he's going to pay to the suppliers? Have you
Okay.
done the calculation before? Because you did this some before, right?
Yes, but I didn't get it clear.
Okay, fine, no problem. Tell me what did you do? We'll read ahead and then we'll calculate the amount that is paid to the suppliers. Amount paid to the suppliers will come where? In payments, right?
Yeah.
Okay, fine. Come on, read the next part.
It is the policy of P Limited to maintain an inventory level at the end of each month sufficient to meet 40% of the sales of the coming month.
Okay, this is for what? You maintain an
For the
inventory.
inventory.
This is for the closing inventory. So you will maintain the closing inventory at the end of each month, which will be sufficient to meet 40% of the sales of the coming month. So it will be 40% of the sales of the coming month. But you know, inventory is maintained at what?
40%.
Cost or selling price, NRV, whichever is lower.
Yeah.
Okay, so you are going to maintain your closing inventory at 40% of next month's cost of sales.
Yes.
Okay, that means you do not have information about the cost of sales and you need to find out the cost of sales. Correct?
Yes.
Okay, fine.
Yeah.
Read ahead.
Depreciation, other operating expenses totaling 1,000 each month.
The
The other operating expenses are paid in the month in which they're incurred.
okay. So every month you have an operating expenses plus depreciation of 1,31,000 and you are paying the operating expenses in the month you have incurred it. Can you tell me, is depreciation a cash expense?
Uh, yeah.
Do you pay money when you depreciate your asset?
Oh, wait, no, 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 we don't.
You do not pay money when you depreciate your asset. That means depreciation is a non-cash expense.
Yes,
Correct?
right. You
Okay.
just take account of it.
So from 131,000, if you're making your cash budget, you do not need your depreciation. So you will remove the depreciation and only the remaining amount will come. Correct?
Yeah.
Come on,
Yes.
read ahead.
Plants and equipment are depreciated at the rate of 15% per annum using the straight line method.
Okay. Read ahead.
All the plant and equipment were bought 3 years ago for 124,000.
Okay, so you depreciate your plant and equipment at 15% and the plant and equipment was brought for 124,000. So can you tell me the depreciation on plant and equipment?
Yes, that's what I'm just calculating. 18,600.
18,600. So from 1,24,000 into 15%. So when you will deduct your 18,600 for depreciation, can you tell me your operating expenses?
Yes. 112,400.
112,400. Are you sure?
Yes.
Okay, just let me check. 1,24,000 into 15% is 18,600. So this is 112,400. Okay. Now 18,600 is for the full year, right?
Yes.
But we want the depreciation for the months.
Mm-hmm.
So what is the depreciation for the month?
So you divide it by 12.
Yeah, you'll divide it by 12. So depreciation per month is how much?
9366.
1,550. Please check.
Miss, you divide 112,400 divided by 12.
Darling,
Oh, wait, no, yeah.
124,000 into 15%. This is
Oh, yeah.
18,600 is
86.
depreciation for the year. When you divide it by 12, you will get $1,550, which is depreciation per month.
Yes, I got the same value.
Okay, fine. Now 131,000 is your operating expenses, which includes depreciation. But I want to exclude the depreciation of 1,550. So can you give me the operating expenses?
Yes. 129,450.
129,450. So I can make this my working note number 3. So this is inflow or outflow?
Oh, this is outlook.
This is outflow. So 129,450 would be my operating expenses. So I will make this my working note number 3 and I will write operating expenses. I will leave 1 or 2 lines because I do not know. What I don't know if there is more income or no.
Yeah.
Working note number 3. So how much is operating expenses?
129,450.
129,450. This is for all the 3 months because you are doing these expenses in the month you are incurring it. Correct?
Yes.
Okay. Cash at bank on 1st November would be 95,000. So they are giving you your opening cash balance. Yeah?
Yes.
And closing cash balance you have to find out. So I don't think there is any more income. Is there any more income?
No.
No. That means you have found out your this what you found out, your sales you found out, the cash sales and the money that you're going to receive from your trade receivables, correct? And in
Yes.
expenses you found out the operating expenses. Now what next you have to find out? The money paid to suppliers.
Yeah.
Money paid to suppliers for purchases. So then you complete your cash budget. So that is your main target. Come on. Highlight all the things that is related to purchases. Which adjustments are related to purchases? First is adjustment number 3.
Mm-hmm.
Yeah.
Yes.
And the closing inventory. This
Yeah.
adjustment is accounted for. This adjustment is accounted for. Now your main target is to find out the purchases and money paid to the suppliers.
Yes.
Okay. How do you find purchases?
Miss, they tell us that we have 50% markup on all sales.
Hmm.
So
Now
we could
listen
use
to
that,
me.
yeah.
You know that your sales minus cost of sales will give you profit, right?
Yes.
Okay, fine. Your cost of sales is made up of what?
Opening purchases.
Opening inventory
Sorry, opening inventory, add
plus
purchases.
purchases minus your
Closing.
closing inventory. Am I correct?
Yes.
So if you want to find your purchases, you will do cost of sales plus closing inventory minus opening inventory.
Yeah.
Are you with me?
Yes.
Okay, fine. You have your sales.
Right.
You can find your cost of sales.
Mhm.
Okay. Plus the closing minus opening is going to give you purchases. And once you know your purchases, you can find out the amount that you're paying to your suppliers. Because whatever you purchase after 1 month, you are going to pay it to your suppliers so that you get cash discount of 98.5. That means 1.5% cash discount you're getting.
Yes.
Are you with me? Now come on.
Yes.
When do you purchase?
Yes. Very much.
When do you purchase? Tell me.
Yes, like every month.
If you are going to sell in November, you will at least purchase in October.
Yeah.
Okay. So what I will do is I will find out if I will do everything from September to January for whatever I have. September, October, November, December, and January. Are you with me?
Yes.
I know my sales for all the months. Are you doing it along with me? I hope so.
Yes.
So I will write the sales for all the months. So I will get the cost of sales. How will I get the cost of sales?
Yes. I don't know.
Hmm? Okay,
Yes, I
fine.
don't know how we are.
See this?
Yeah, 50%.
So markup is 50% on all sales. Markup is
Right.
on what?
On cost.
So this is half on cost.
Yeah.
So it will be how much on sales? Markup is the profit.
Two-third, two-third.
No, yeah.
Sorry, wait, no, one-third, sorry.
So it
It's,
will
it'll
be
be
one
one
third
third of
on
that.
sales. So if the entire profit, so if the entire thing is 3,
Yes,
markup
it'll
is
be
one
one third
third.
because it's 50%.
Markup is one third. Okay. So
Yeah.
can you tell me what will be the cost of sales?
The remaining two-third.
2/3. Are you with me?
Yes.
So cost of sales is 2/3 of your sales. And I am interested in the cost
Yes.
of sales. Yeah?
Yes.
Okay, fine. So come on, tell me the cost of sales.
It's 240,000.
Sorry?
240,000 for September.
Okay.
280,000.
Hmm.
260,000.
Hmm.
300,000.
Hmm.
250,000.
250,000. I know my cost of sales is equal to opening plus purchases minus closing. And I want to find out
Yeah.
purchases. So I will do what? Cost of sales plus closing minus opening. Are you with
Yeah,
me?
miss. Yeah,
Okay, fine.
miss.
Come on, let's do closing inventory.
It's 40%, which is sales.
It is 40% of the sales of the coming month. Hello? Are you with me?